So here we are, the day before probably one of the most, let's call it, polarized elections in the history of U.S. politics. We've got just some amazing headlines on the weekend. The Biden campaign bus getting swarmed by Trump supporters on the highway to the point where they had to pull off the road. Walmart has resumed sales of guns and ammo. I don't know who's the genius who succumbed to that logic. And well, what else? The Dow is poised to, or is in the process of recovering the 400 points it lost on Friday. Let's start with you, Adam. What's going on here today?
And the other headline, cases are continuing to surge across the globe. So, and we're seeing lockdowns. Yeah, this is a very busy week. We've got the election obviously coming up. We also have a Fed meeting. We have a jobs report, and we've got dozens and dozens of stocks reporting earnings. So obviously there's going to be a lot of fireworks. A lot of things are going to be, a lot of expectations built up. There's two scenarios. We have a tremendous unknown, or it's a anticlimactic kind of, okay, this happened and the markets are really priced all that volatility in over the last few weeks, and it's a quiet week. Obviously, nobody knows what's going to happen. Our job as risk managers is to prepare for all possible scenarios, up, down, or sideways, and then trade accordingly. So that being said, it's a lot of unknowns. And whenever markets like certainty, whenever you have a lot of uncertainty, that tends to lead to a lot of volatility. So I wouldn't be surprised to see a lot of big swings coming in over the next few days, depending on how the events unfold. As I said last week, I still believe Trump is going to win. If you look at the rallies and the amount of people or supporters that show up, I don't know the number, but I think it's 100 to 1 or whatever the variant. There's a ton of Trump supporters that show up to these events, and Biden doesn't have as many. That could be because Biden supporters are more cautious of COVID and Trump supporters aren't. It could be they're a lot less interested. Who knows? All I know is so far that the crowd is usually wrong. The crowd believes a blue wave is coming. And I tend to do best when I fade the crowd or go against the crowd. And that's a contrarian inside of me coming out. So it's a foregone conclusion Biden's going to win. In 2016, it was a foregone conclusion Hillary was going to win. Hillary lost. I'm expecting Biden to lose just for those reasons that we just mentioned.
Wow. Okay. And Jeff Z, what's your expectation?
I don't want to sound like, just like Adam, but I'm agreeing with him. I've made a good bit of coin fading the intelligentsia over my life, and they're locked in. Biden's won already. And if you look at solar stocks the past 4 weeks, if you look at Chinese equities, smooth sailings, happy days are here again. And so I think it's going to be messy. I think the worst case for the short term for the market is going to come true. I think that Trump is going to have a lead in Florida and Pennsylvania after tomorrow night, and he's going to have the Electoral College, but there's going to be a big litigious shit show, for a lack of a better term. Specifically in Pennsylvania, I have a really, really good friend that's a high legal expert, and he was saying that since Gore Bush, there's a lot of precedent in the state of Florida. So Florida is not going to be as big of a problem in terms of obstructing the Trump victory train to move on. But Pennsylvania is where we should be paying attention to, because they're already setting up shop, ready to sue the legitimacy of a Trump victory. So I think Trump wins tomorrow night. I think people don't buy it. I think it drags out in courts, and the market is just stuck in this limbo for a few weeks, which would probably be the worst case scenario for volatility.
Okay. Wow.
I'm dying on that hill too. You guys can bury me next week.
Roger, what are your thoughts?
Well, I'm not very far off either Jeff or Adam. I'm kind of in the same boat, I've got to tell you. Here's what I think. And one of the things I have a law degree, which doesn't come in very useful most of the time, but this is very much in line with what Jeff just said. I think the biggest problems are going to be with how every state is giving different rules for when to count the mail-in ballots, okay? And I'll explain to you why. That's not a state issue, it's a federal issue. There's no bigger federal question than who's going to be the president and voting for a president. States have nothing to do with it. It should be one uniform period for every state, because it's completely interstate commerce. I mean, I could go on and on, but it's not a state issue. And I think we're going to have a lot of lawsuits in regards to when those mail-in ballots are going to be counted, in addition to a host of other factors that are already being set up that are completely politically based that Jeff and Adam touched on. So that's number one. I think we're not going to get a clear answer for quite some time because of all the the viciousness and the closeness and the bipolar nature of these two candidates. So I agree on that. Also, one thing we've learned about Trump over the last 4 years is you can never count him out. You know, just when you think he's had it, he surprises people. He's that dog that, you know, you kick and kick and kick, and you think he's going to die, and he just jumps back and bites you in the ass. So I wouldn't rule Trump out by any stretch of the imagination. And again, the market is pricing in solar, and I believe the market is pricing in more of a factor of Biden winning than Trump winning, and that's been going on for several weeks. But again, I wouldn't rule anything out, and I think we're going to get into a mess after the fact. The market right now is between the 50 and the 200-day moving average. It's expressing that right now. I call this the twilight zone. And if you look at the economy, it's in a twilight zone. One thing that I'm going to say that has the capacity to overburden or overcome all this, and that's if we see a huge increase in the COVID cases. The prognosis is it's going to get very ugly in the next several weeks, and we're going to see a lot of pain. So I think that's the only real thing that could overcome the election vibe and the uncertainty of the election. That's pretty much it, in my opinion.
Okay, and Jeff, why you're I'm going to assume in the same boat, same camp?
Well, you know, actually, I'm kind of way on the outside on this. I don't think it really matters in terms of the stock market, who wins, you know, in terms of Biden versus Trump. I think a lot of it has already been priced in. I think what we're talking about here is really just uncertainty. And I believe that once that uncertainty is removed, and to be honest, I think a lot of the court cases and litigation that is being threatened, you know, from both sides, they're all lawyered up. A lot of that, we've already seen that over the weekend. I think the Trump, I don't know if it was the Trump campaign or the state Republican Party in Texas had contested, I think it was like 140,000 votes. And the Texas Supreme Court came out against them. I can't remember. I think there's also something going on in Pennsylvania regarding all this. But my point is that a lot of these things, there's already, this is not the first election to be contested either in whole or in part at the state level. And this is just state laws are just state laws. This is just part of the election process. And I guess my broader point is that a lot of these cases that may be brought, unless there's something really evident about them, chances are it's going to go against whichever side is saying, hey, that's not fair. And the other question is regarding those sections that may be contested, again, from either side, is there enough votes within that group of ballots that they're contesting to even, you know, make a difference? Obviously, we won't know that until we see the full count, which may take obviously beyond just a day, it may take several days or longer. But my broader idea here is that I think most of the uncertainty is already reflected in the market at these prices. And I think once that uncertainty is removed, which I think is going to happen within a day to 2 days of tomorrow, I think the market's going to be primed to move higher, simply in part because so many people are on the uncertain or bearish levels. We saw that with like put call ratios last week, which moved from like extreme bullish, from the extreme bullish side to a point we hadn't seen in many months, to a point where you know, by Friday, I think the put call level moved up to like 1.1 or 1.2, moving fully to the bearish side of things. So I just feel like there's a danger in feeling too uncertain, because I think everybody's leaning in that direction. And to me, that says we may well get higher prices. Last thing, sorry, I'm sucking up so much oxygen on this, is that you have some very good and I think ultimately bullish ideas going on here regarding, we saw Moderna come out and basically say they're taking in a huge amount of deposits for the vaccines. They're actively prepping the rollout of their vaccine. We saw similar news from AstraZeneca last week, and also from, can't remember the third one, if that's Pfizer. But I'm just saying, you have to remember that's also happening out there. So even as the second wave news is happening, all it would take is basically, hey, there's approval now, and we're moving towards the rollout of the vaccines for people to be injected or inhaled or however they're delivering the vaccine. And that takes a lot of the bearish sentiment straight off the table. And I think it's all fully reflected here.
Okay. Well, in that, somebody has to adopt the contrary side of the argument here. I'm up in Canada, and from where I sit, we look at the Canadian interpretation of the news that's happening in the United States, and it looks like a fait accompli if we were to believe the polls. This morning, it was reported in Wall Street Journal that 92 million Americans have cast an early vote, of which 45% of the vote in states that registered party affiliation were from the Democrats, and only 25% were associated with the Republicans, and a full 25% of the votes were non-affiliated with any party. So already in this vote in 2020, the turnout has reached 62% of the total votes in every previous election over the last 10 years. In Hawaii and Texas, the number of voters have already exceeded the last voter turnout. So my question for you is, as a Canadian looking from without into what's going on in America, is it such
You're
a
muted,
case
Jeff.
is it conceivable that my impression is based on a predominance of Democrat-controlled media and polling results? Or is it more that perhaps Republicans are more visible and louder?
Can I answer this?
Sorry?
I want to be the one that retorts this. I have some good factoids for you.
Okay. So to wrap it up, in my long and convoluted windbaggy way of asking a multifaceted question, are you telling your subscribers to prepare for a Trump victory or a Biden victory, or to sit back and wait? And Jeff, let's start with you, Jeff Z.
So first to respond to the early voter thing. So I know in the state of Florida, so when you speak nationally, there's a national trend, and yes, there's more people voting in California. There's more people voting in New York. There's more people voting in solid blue states than voted last time, and early, right? COVID has a lot to do with that. But in Florida, this is an interesting little nugget. The same trend is continuing. Florida's the jackpot of swing states. And at today, as we sit today, and we started counting mail-in votes in Florida, which they haven't in Pennsylvania yet. They won't until tomorrow. But as we sit here today, Mr. Biden has 108,000 vote lead, which might sound a lot, but it's not. They wanted 2 to 3 times that. They wanted 2 to 3 times that lead going into tomorrow. Why? Because tomorrow there's going to be 2-to-1 Republicans over Democrats that vote in person. And we have 700,000 Republicans that are still going to vote, and about 350 Democrats that still have to vote. So that's why you're seeing a lot of this fake news stuff saying, oh my God, look at the mail post office in Dade County. They just got stacks of mail. They didn't count it. They're already starting to panic because they don't have that mail-in vote. Second question, to answer that real quick. Yes, I am telling my clients or our subscribers to pull back, because not to discredit Jeff Yasteen, but I have a different time frame and I'm much shorter. And in the short run, nothing is fully priced in. The shutdowns with Biden are not fully priced in. The United Kingdom month that they just got out of the blue was not fully priced in. And certainly a Trump victory, which the media is not saying is going to happen at all, is not priced in at all. So because of that uncertainty, and because basically everything is still on the table, and Roger's been doing this, and we've been on shows together talking about this, you have to be in defense mode. You have to be in tight mode. You have to be small, because after the picture clears up towards the end of this month, the middle of the end of this month, there's going to be some amazing opportunities and trades going into the new year. So I hope I wasn't too long-winded there.
No, that's excellent food for thought. And it's interesting that the perception can be so far from the reality if in fact that does turn out to be the case. And
it's not just the US. Brexit, on the night of Brexit, was 95 priced in to stay. When Brexit came out, the euro moved 5%. I've never seen it in my life. That's never like that. That's not a normal euro US dollar move. So John Kerry on election day had a lead in the exit polls. He was leading the exit polls as the market crashed. You can look this up. S&P went down multiple hundred basis points with an exit poll lead. John Kerry got smashed in that election. It wasn't even close. So what I'm saying is there are opportunities to trade asset prices based on common wisdom that just ain't so.
Mm-hmm. All right, Adam, and are you preparing your subscribers for a Trump victory?
Sure. Yeah. I put out a note on Friday over the weekend, which said, hey, listen, everyone's leaning to the left and the blue wave. I'm expecting Trump to win just because the crowd's usually wrong. I mean, it's not much deeper than that. If you look at historically any big, large data set, if everybody's on the right or everyone's on the left or everyone's up or everyone's down, wherever everybody tends to be, it usually doesn't work out. Not always, but most of the time. So to fade the crowd or to bet against the crowd or to take the other side of the trade tends to be a very good trade from a probability standpoint. Forget about any political opinion, forget about any kind of, opinion whatsoever. All it is just straight probabilities. So in investing, our job is to manage risk, and risk comes in many different sizes and shapes, and it's just a probability of future outcomes. Some outcomes are positive, some outcomes are negative, depending on where you're positioned. That's all it comes down to. So whether Trump wins, it's a contested election, Biden wins, it's a blue wave, red wave, it's purple wave, it doesn't even make a difference. The fact is that your portfolio is positioned a certain way. There's going to be an outcome from the market. The market's going to go up, down, or sideways. How are you prepared for it? And then if it doesn't go your way, what are you going to do to adjust? And that's how I keep things really simple. And those are the salient points that I focus on because that helps me navigate all of these unknowns. And then after, don't forget, after the election tomorrow, hopefully it's over tomorrow, we also have the Fed, and then we have the jobs report. We've got tons and tons of stocks coming out with earnings. So even if the market gets hammered, remember, there's this whole concept that we've spoken about on the show many times over the last several months. The Fed put remains alive and well. We saw that back in March. We've seen that every time the market gets in trouble, the Fed put's just a fancy way of saying the Fed's going to step in, inject more money into the system, and other central banks as well, to help lift the stock market. And that's why even if we do go down, as long as the market continues acting well to all this easy money, to me, that easy money, pardon the pun here, but trumps everything else. So that's my thought on the whole situation.
Sure. Okay. Roger, what do you think of the outcome? Are you advising your subscribers to align for a Trump victory?
No. What I'm telling my subscribers is the same thing that I've been telling my subscribers for the last month. Stay in stocks that are not as dependent on the election. Lower your exposure to about 15%. Switch from stocks to ETFs. If you're going to go in stocks, make sure you have just as many shorts as longs to hedge yourself. I think, here's what I think, and again, my tune has not changed. I think the presidential election is going to be a very short-term unforeseeability type of a thing. I think what's going to happen is we're going to have a shakeout. I think we're going to figure out who the president is. It may take a week. It may take a few days. We're going to see a lot of volatility, but then it's going to cool off and the market's going to set its tone. I don't think we're going to see the reflection of policy decisions that fast in the stocks because a lot of the stocks have already taken a position. So my focus right now would be to stay away from either. I think the COVID-19, I think what happened in January, February, March, and April really set the tone for the market a lot more than the election. And I think if the World Health Association is right, and we are going to have a lot of pain over the next few months, I think that is going to be the biggest factor. And I think Americans, after this election's over, they're going to go back to being focused on the virus. I think that's going to be the biggest factor once again. I think this election's kind of taking people's focus away, but I think that's going to kind of shift immediately. Winter's coming, cold weather's coming. I think that is going to be the biggest factor driving this market. So to me, this election is kind of like a little loophole or a little detour from the action of where the market's going to go. That's what I think. I think what happened in the beginning of this year is the biggest factor driving this market, and I don't want to get away from the big picture. Sure.
Okay, and Jeff Y, you've already made clear your election agnostic approach, and so is that something? Is there any sort of weighting in your advice to subscribers, or your comments to subscribers rather, that sort of prepare them more for one side or the other, or are you just completely agnostic with your sort of position?
Yeah, well, like Jeff brings up a good point as far as it depends on timeframes, and obviously, if you're playing stuff like options, which I'm not with my service here, then I have just a different longer term perspective, weeks and months versus hours and days, which obviously makes a huge difference when you're doing options or share prices. A couple things. One is the Fed, because Adam brought up the Fed earlier. The Fed has sort of refrained from doing much in the way of liquidity injections lately, and I expect that once the election is out of the way, they will begin to do a lot more and just be a lot more active in that sense. The other thing I think is that once the election's out of the way, I wouldn't be surprised if we see Congress called back into session and we start seeing progress on this the stimulus impasse, which is also something that's been weighing on the market. So you take those two factors and then also bring in the other factor regarding the progress on vaccine development. To me, I see it where you want to go into this election long and make sure that you're there, because to me, I would think that the overall market, maybe it gets down to the 200-day moving average for the S&P. Beyond that, I just don't see much downside below that level.
Okay. Well, interesting. Is there any sort of position that a subscriber could adopt that would hedge them adequately against the unexpected, in the result of the unexpected being the outcome of the election? And have you taken any sort of hedged position? Adam, I'm going to start with you again.
Sure. So there's a few ways to do that. Number one, my favorite way to hedge a portfolio is an ETF. It's the ticker symbol is HEDGE, HDGE, and it's the Advisor Bear Short Index ETF. Basically, it goes down when the market goes up. Excuse me, when the market goes down. So it's not an inverse ETF, because let me speak about that for a second here. Inverse ETFs are ones that are, they just basically do the opposite of the index that you track. The problem with inverse ETFs is they don't really work. I just had an article in Forbes about it a few weeks ago talking about inverse ETFs are broken. If you Google it, you can read it. And basically, they're not meant to be held for more than one day by design. So people that hold it for more than one day, the returns just don't track the index. So if the S&P is up 7 for the year, 7%, you would expect SH, or the inverse ETF, to be up the opposite amount. Instead, the SH is down, I think 21 or 22% when I wrote the article, and the S&P was up around 7. So it's not down, it's not inversely related. So you don't even know what you're tracking. So for me, HEDGE, HDGE, it's an actively traded ETF. They short stocks outright. It's professionally managed. I know the portfolio managers, for full disclosure. They're great guys, very, very, very well trained. And that's a great way of doing it. The other way of doing it is by buying puts. Up until just Friday, we had puts on for the service for all subscribers on the QQQ, the NASDAQ 100. So if the market went down, we'd profit, we benefit. So we sold those puts on Friday, and we'll look to buy some more protective puts on any of the indices going forward. But that, those are just a few easy ways of shorting the or protecting yourself or hedging yourself. But like Roger and both Jeffs had mentioned earlier, you can also lighten exposure. You don't have to be 150% or 200% invested all the time. So you can adjust your exposure, and that's another good way to hedge.
Okay. And Jeff Y, do you have any hedging plans? Or are you all in on your bets?
I don't have any specific hedging plans. I feel like if you were trying to bet against the market, the better time to bet against it was the beginning of October, or back when the market had hit its peak in early September. So no, at this point, I think the fluctuations we're talking about are going to be so fast and so fleeting that unless you're in the futures market, or you've already set up some sort of some sort of collar or butterfly or what have you, it's just going to be hard to benefit. And since we're all expecting there's so many people expecting a great deal of volatility. Again, I would expect a lot of that would also be priced into the options, and therefore you may not get as much bang for the buck, relative to the specific contract you're buying.
Sure. Jeff Z, are you playing a hedge at all?
I'm always hedged, man. I'm a hedge fund trader. That's the whole definition of it. So yeah, of course I'm hedged. I don't know what's going to happen. I deal with possibilities and probabilities. None of us know what's going to happen. We can sit here all day and play out a perfect scenario, but you got to be prepared for different scenarios. So strictly speaking, I like to try to put on trades that are going to work in a variety of different scenarios and have a few that they won't work. And so to speak to Roger's point earlier, there are broader things that have been moving the market, and the election is kind of like a little vacation from that. So I like to play the strength of the new reality. I've been playing this COVID trade since the beginning of it. I've doubled down on the reality that we're not going to have an economic bounce back a la 2019. And it's fool's gold to try to, find the beat down darlings that are going to go back in time and play Marty McFly to a world that doesn't exist anymore. So I'm looking for situations to put on long short spreads. I feel like certain sectors that have been priced in the Biden victory have extended themselves and will pay in any scenario, just because that's the nature of sell the news events. And if you want to learn more about it, go on moneylinks.com. I'm always long short. I pair trade. I'll teach you how to pair trade. I'll teach you how to do it in options, and I'll teach you how to do it in stocks.
All right. Okay, Roger, what do you got for us in the way of the hedged trade or the hedged sort of approach to the election outcome?
Well, we've been hedging a lot, and as a matter of fact, I've been giving some trades that are very similar to Jeff, just because I want people to be hedged. I talked about a link trade, going long Discover and going short American Express. It's been working out really, really well, and I think it's going to continue because consumer credit is going to recover faster than commercial credit. It's just a principle of this COVID-19 and where we're at right now. Businesses are going to take longer to come back than consumers. It's already happening. Discover continues to rise up, and American Express continues to fall. We took 107% profit on volatility on VIX last week, and we're about to get into it again. The TLT, the bond position, gold, copper. I think these are all shorting the energy market. I think going with the strongest stocks and fading some of the weakest ones. We've been giving nothing but ideas over the past few weeks of how to do it, and my advice has not changed at all over the past quarter. So I think people should stay the course. Again, my biggest concern right now is not where they should invest. People who've been following me know exactly where to invest. The biggest factor is how much they should invest. People need to have a better appreciation for risk and volatility, because we may have some unforeseen times and a few rough roads ahead of us. So you want to have low exposure, and you want to be completely double side protected. So again, this is not a time to be a hero. I think we're going to see strong gains in the stay-at-home stocks, just like we did in February, March. I think we're going to see the energy, the cruise ships and airlines fall back down, as I've been saying for the last 6 months. I don't think we're out of this environment just yet. I'm waiting for the second shoe to drop, but that gives opportunities for stocks that went up in February, March, and April. Look at your Pelotons. Look at your Zoom. One advice I'm going to give people is this: if you are going to go long, try to find stocks that took out the September 2nd high, because that's the all-time high on the S&P. I've been saying that for weeks, and it's been paying off well.
You bet. Okay, gentlemen, let's leave it there for now. I just want to remind all our viewers that there is going to be live election coverage throughout the days this week, during the election and after the election at Wealth Press TV. Go to wealthpress.com/wealthpress-TV. And I'll look forward to talking to each and every one of you throughout the week and on the election coverage front as well. Thank you so much for your time today.